Florida, please know the next collapse will be 100 times more devastating. At least that's what I'm reading. That's what I'm seeing. That's what the experts are saying. And who am I to discount what they are thinking at this point? I mean, there are plenty of content creators out there that are going to scare the ever-living bejesus out of you with their opinions, not with data. And so today I want to do a deep dive into what that looks like and the reasons why we are seeing a very big collapse in terms of buyers in the market, but address some of the fundamental issues that are happening right now, because let's face it, the world just changed overnight. And the fact that real estate doesn't necessarily respond to that as quickly as the stock market, let's say, it takes a long time for real estate values to catch up with anything that happens economically. So having been a stockbroker for 20 years, I know that in real time, when news comes out on a company or data changes internally with a company, it's priced into the stock instantly and the market reacts. So you know in real time what the opinion of value for that position or company or equity is. Real estate doesn't work that way. But last night, Mondami won. Congratulations. New York cities or New Yorkers are rejoicing, I'm sure. But I remain committed to sharing the truth so that you can make the best decisions for yourself, for your family, and for your financial bottom line. And the reality is, my phone has not rang the way it's ringing now since we were in the COVID pandemic, since we were in the frenzy of 3% mortgage interest rates. It was just a complete bonanza, and anybody who was shopping during that time remembers how difficult it was to get a contract accepted. And that's not what it's like today. So buyers have way more leverage to be able to negotiate better deals, and the smart ones are doing so. Comps mean something. Now, last night, Mondami got elected, which was a surprise to nobody, and this morning, I got 2 phone calls from people from the greater New York area that want to and will relocate down to Florida. And I'm in Southeast Florida, Boca Raton, Delray Beach, Boynton Beach. Those are the markets that I primarily service. But we also service Wellington, Fort Lauderdale, Coral Springs, Parkland, basically anywhere in West Broward and South Palm Beach County, right? This market is different than other markets. And that's not just realtor speak for my market's better than yours. It's just the reality of the intensity of demand and the lack of supply. Now, there's a lot more supply on the market today than there was in the recent past. And there are a lot more homes that are sitting on the market unsold than there were in the recent past. But I saw some of your comments yesterday, and some of you think that I'm a MAGA mouthpiece or some type of snake oil salesman. I will say you're probably right. And the rest of the commenters, longtime listeners, or excuse me, longtime watchers, rebutted that and said, no, that's not true. And I appreciate you for doing that and having my back. I've always got your back. But I spoke to a real estate agent friend of mine who also has a home for sale, and he upped the list price by $100,000 today because of Mondami's victory yesterday. Now, is that the smart thing to do? I don't know, but actually I do know. And if you want to know what I actually think, then feel free to reach out and I'll tell you. But who am I to tell him anything? He's a professional, and he believes that his value has increased by $100,000 on the property that's been on the market for not that long. Because of that win, right? And he's had an uptick in people that are showing the property based on the fact that they want to buy the home. So is that a real value change? I don't know. The market's always right, and it doesn't care about my opinion of value, your opinion of value, or anyone else's opinion of value. Your home is only going to be worth what a ready, willing, and able buyer will pay right now. But that being said, the Mondami effect is real, and I'm getting phone calls. And that's great. It's very exciting. There's going to be an uptick in relocation buyers from that market into this one. And Southeast Palm Beach County, West Boynton Beach, Delray Beach, Boca Raton, they are not Clearwater. It's not Port St. Lucie. It's not the west coast of Florida. It's not a challenged market the way some of these other markets are. So there are builders out there right now that are discounting home values. They are desperate to get those properties off of their balance sheet because they're hemorrhaging cash. And so they'll offer incentives unlike anything a retail seller could offer, because they are the bank, right? So you can get an incredible deal and an incredible mortgage interest rate from a builder if they are in trouble. And there are lots of them in other markets that are. So that being said, if you're shopping anywhere else in Florida and want me to connect you to an all-star professional who can negotiate for you the right way, then please reach out. I'm happy to do so. But getting back to business, the collapse that is looming, or the perception of the collapse that is looming. Well, the one thing I know for certain is that the market hates uncertainty. And every market that goes up must come down. And we are in an everything bubble. We have been for a long time. So at some point in the future, everything is going to correct and will be repriced. But supply and demand will always dictate price. And in my market, the reality is there is no more land to develop, period. And when builders, I'll give you a case study here, start to develop, when they run out of land and they start to find municipal golf courses that they've rezoned to build communities, they're getting really desperate. And there are areas within my market that have been suboptimal for years. In fact, there's a region of West Lake Worth over by 441 that honestly nobody ever wanted to live in. It felt, the perception was less than. And honestly, you couldn't pay me, or at the time, you couldn't have me even think about living there. It just wasn't an attractive place to live. And I drove by there the other day. There are 3 new developments being built as we speak, and the starting price in those communities is $1.5 million. I almost drove my car into the median. I was so shocked. But that's the reality of it. So that suboptimal land and that non-desirable area that I have in my mind, which used to be true, is turning into an area that is going to be starting at $1.5 million. So there is an affordability issue here in my market. The market doesn't care. Buyers want what they want when they want it. And people who are looking to escape New York, they don't care about price. They simply want the freedom of Florida. And they want nothing to do with being overtaxed or marginalized in any way. But that's the reality of what's happening right now. But I doubt anybody's going to argue with you when I say that prices are too high, mortgage interest rates are extremely high, taxes are creeping up, insurance is crushing everybody, it's through the roof. And if the doomsday predictions are right, and the naysayers and pundits are right, then this next collapse is going to be 100 times worse than anything we've ever experienced before. It's going to make 2008 feel like a walk in the park. But here's the reality of that analysis. The math simply doesn't math. The numbers don't add up. It doesn't make sense. So let's break it down. And let's start at the top. Let's start with the Fed. Let's talk about monetary policy and what Powell is or is not going to do. Because lots of people believe that he is the primary driver of what will or won't happen as it relates to real estate prices in this country. And while everyone is predicting and anticipating further rate cuts, the reality is that the Fed absolutely 100% will not cut rates if the government shutdown does not end. Because while the government is shut down, the Fed does not receive data that it must have in order to make a decision. And unlike some of these content creators that go out there and share their opinion with no data, the Fed must have data, and the numbers don't lie. So if the shutdown continues and they don't get the numbers and the data and the real information in order to make the best decision for themselves and the country, there will be no rate cuts, period. So if there's no CPI data and there's no job data, well, then there's no legal justification for a rate cut, period. And while most folks think that the Fed controls mortgage interest rates, it's not true. Mortgage rates follow the 10-year Treasury, period. They don't follow the Fed funds rate. And the mortgage market, the rate has already priced in what those cuts, anticipated cuts, are going to be, which is only a long way of saying the market has already priced in those rate cuts. So if there is no data or the data is stalled, then panic sets in. And while we've already discussed a little bit about the migration happening from New York, there's also a mass exodus that's happening from California. And both New York and California are losing high-income earners by the thousands. And if your revenue base of tax is bye-bye, well then chances are no bueno for your economic balance sheet. And that's not good for either of those two states. Losing wealthy households, high-income earners, job creators, businesses, entrepreneurs is no bueno for the state's statistics, for their revenue tax base. It's not good. And both of those states are hemorrhaging cash to begin with. I can't wait to see what Mamdani is going to expect from Trump as it relates to a bailout, because they will need one. And I don't think Donald is going to be very excited or likely to do anything for Mamdani, especially after his victory speech last night, which, if you haven't watched, I suggest you do. It is unbelievable. But once again, congratulations. Mamdani's winning, New York's losing. Florida is about to hit the lottery as it relates to home equity, because home equity is going to skyrocket. And to be clear, equity isn't real until it's realized, but the reality is supply and demand will always dictate price, and I suspect we're in for another boom similar to what we saw during the pandemic. But just my opinion, could be wrong. I've been wrong before, but I doubt it. Now, on that same note, spoke to another real estate friend, works out of Fort Lauderdale. He put 2 properties, both north of $1 million, under contract today for a buyer, actually from California, not New York, but in order to take advantage of a tax strategy, he had the liquidity and the wherewithal to purchase 2 investment properties in Fort Lauderdale on the water and use those as short-term rentals. And the deals make sense. They are cash flowing. They are DSCR products, which means, again, I don't know why I'm going into mortgages here, but you should know, the mortgage is contingent on the rent covering the mortgage, the loan. And both of these deals cash flow. So most folks right now don't have several $1 million to go out there and buy 2 rental cash streams, investment properties. That's just not the reality of what the market is for most people right now. But I'm not talking to most people right now. I'm talking to wealthy individuals who have the flexibility and freedom to make choices which will 100% continue to impact the market, the local market, the hyper-local markets. And that's just the way it goes. Period. The market doesn't care about fair. The market is always right. Now, just to be clear, every time there's an election, you always have a population of people or a subset of the population that make bold claims that they're leaving the country forever or they're leaving the state forever. And the reality is most people are just full of crap. They don't actually pull the trigger and move. So I don't know that everyone who says they're going to move is going to. But I do know that as per surveys, right now, 750,000 New Yorkers say they want to leave. But the reality is most of them are simply just emotional. They are simply just pissed off. They're not actually going to move. So I don't put a lot of faith or stock in what that survey says, but I think it's fair to say that somewhere between 5 and 10% of that 750,000 will, and that will be Florida's gain and California and New York's loss. But let's run the numbers on what it looks like at 5 to 10%, right? So 75,000 or 100,000 wealthy, high-income households leave the state. That is a massive economic hit because they bring the payroll, they bring the capital, and they bring the investment dollars with them. Now, between 2020 and 2023, over $1 trillion in wealth migrated to Florida. And that is not my opinion, that is IRS data, not theory, data. And that's why you see so many New York license plates in Florida, in Delray Beach, in Boynton Beach, in Boca Raton, especially during holiday season. So the reality is the next collapse is not going to come from demand disappearing, it's going to come from affordability breaking. But let's zoom out for a second. For Florida to actually collapse, the following things really have to happen. Number one, there needs to be a mass exodus of job creators, which is simply not going to happen. And then you would need lenders to start freezing credit. And that is not likely to happen anytime soon. But separately, as part of the process, appraisers would need to apply negative time adjustments market-wide. And that only happens when the market is truly collapsing. And the reality is right now in Florida, the fundamentals are fully intact. We have wealthy relocators that are coming, and there are more coming soon. We've got zero state income tax. We have a very business-friendly climate, a high quality of life, sunshine, space, and relative safety as compared to many of the dumpster fire cities that are out there across the country. And yes, you can do your own research. There are some areas of Florida that are less safe than others, but the markets that I'm talking about are extremely stable and safe, welcoming and friendly. And yes, the insurance market, it's broken. We know that. The good news is that some of the changes that were enacted by DeSantis are starting to bring more competition in the market, and so insurance prices, although they are still very high, are slowly starting to become much more reasonable. But in order for there to be any price relief, the reality is we need more housing supply. But to be clear, those are bottlenecks in the market. They are not the catalyst for collapse. And already this video is way longer than I anticipated that it would be. So I'm going to give you my 2025, 2026 playbook of what you can expect. Mortgage rates, I suspect are going to drift into the fives. Let's call it mid fives. FHA and VA buyers are going to be welcome back into the market. Because truthfully, during the frenzy, VA buyers, FHA buyers were considered less than, even though they're not. But most sellers did not want to accept that type of financing. Well, today, they'll accept any financing they can get. At the end of the day, they don't care how they get paid as long as the cash is green. And so there's going to be an uptick in both of those subset of buyers back into the market, which will continue to insulate the market and home values. I also suspect in 2026, we're going to see move-up buyers unlock equity and start to trade up. And while it's factually true there are many builders within the state of Florida, there are also many builders that have hit the pause button and shelved lots of different projects for lots of different reasons. Mostly inflation and the fact that the cost of lending was so high. But I suspect as the rates come down into the mid fives, you're going to start to see some of these builders get back into the market and start building homes again. And if builders are building, that means that construction and home-related services, jobs, uptick. And job expansion is the key to economic growth. So I think 2026 is going to be much more of a normal market than we've seen in a long time. And normal to me means somewhere between 4 and 7% of home value appreciation throughout the year. But that's not what it's been like for a long time. We are used to and spoiled by massive expansion, massive value gains, massive equity upticks, and most people feel like they're sitting on a metric shit ton of home equity. unless of course they bought at the high a couple years ago, or if they're in a mortgage interest rate at damn near 8%, in which case, as I've already mentioned, they're going to refinance and have more options. But I expect to see a more normal market in 2026. But unlike the boom and the explosion of equity that we had during the pandemic, this time it will be slower, it will be steadier, and it's likely going to be fueled by refinance relief and relocation wealth. But that's the bullish case for the market, right? Let's talk about the bear case, because there are some things that you need to watch out for. There are some red flags that you must monitor. And the first thing that you need to be aware of is unemployment. If unemployment is above 5%, that signals stress and rising delinquencies. Rising delinquencies are no bueno to the housing market. In fact, it only took less than 10% of the overall market to be in distress during the last crisis, during the great financial crash, to bring down the overall home values in the market by 20%. But the reality is there is not a lot of distressed housing within the Southeast Florida housing market. Now, the next watch out is the appraisal issue. If appraisers start applying negative time adjustments, again, like they did in the last crash, well then that indicates a very big swing in momentum. And if that happens, it does become the catch a falling knife game. So you really have to be zeroed in to exactly what is happening in terms of intensity of supply and demand in the micro market that you're shopping in. Because if those things start to happen, are happening, no bueno for the housing market. And the third and final thing to watch out for is on the lending side, right? As strict as the lending requirements became after the great financial crisis, they're still relatively easy if you're qualified, right? So the no income, no docs, nothing but a pulse days, those are long gone. But if lenders start to tighten the debt to income ratios or the loan to value caps, well then credit shrinks almost instantly. And that will absolutely signal a massive change in the housing market. So you have to be mindful of what's happening on the financing side, on the banking side, on the economic side, and pay attention to all of the different variables that are always in play. But truthfully, despite what the headlines may say and what the clickbait may say, the reality is if those three things aren't happening, you can just ignore all of that hype because it's 100% not true. So yes, a Florida collapse 100 times worse than 2008 makes for great headlines, and it's probably why you clicked on this video to begin with. But the reality is Florida remains one of the strongest, most in-demand housing markets in the country. And you must know what the cycle of the market is when you're shopping, and you have to know how to play the cycle with the data, not the drama. And with all that in mind, I'll wrap it up because again, this is far longer than I anticipated it to be, and it feels good to be back. But if you are shopping for a home, or if you're thinking about moving ever, the first thing I would say is there's no such thing as a good or bad market. The market, the real estate market, the housing market is always good for someone. And the only time to buy is when it's right for you. Timing the market is an absolute disaster. You're never going to get the absolute bottom, and you'll never know when you're getting the absolute top. But if you are hyper disciplined, know your numbers, know exactly where you're at financially, well then you can't lose, because over time you will absolutely make money on your housing investment. But housing is not an investment, it's where you live. It has utility. It's where you make memories, it's where your family is, and everybody knows home is where your heart is. So all that being said, don't be scared, just be prepared. And if you or anyone you know is even thinking about buying or selling, investing in Florida, please give me a call, Chris Igoe, 561-516-2442. We will find your dream home, dream lifestyle, negotiate the best deal humanly possible so that you can max out South Florida living to the fullest.